Alright, hi everybody. This is Mr. Manning again, and this video is going to be about recording transactions into the cash payments journal. So something that I'd like to remind you of before we even begin at all. The cash payments journal is a special journal that's used by corporations, and its purpose is to record any transactions that involve spending or paying cash. So, if the corporation purchased anything with cash, it goes into this journal. If they did not buy something, it goes into a different journal. And if they purchased the item with or on account, it does not go in this journal. But if they bought something and they paid cash, it goes here. Okay. So here's what you're going to need to be able to do this. You first need to pull up your cash payments journal template, which should be available to you. And you're also going to need a copy of the transactions. We are going to do the work together transactions, work together 9-2. I would like for you to try the on your own ones after this video is over, but we're going to start here. Okay? So as I'm looking at the transactions, one of the very first things that I notice is that it says paid cash on every single transaction. That is super important. That paid cash tells us that we bought something and we used cash to buy it. So therefore, we're going to use the cash payments journal. All right, so let's begin. Transaction number 1, October 1st. Paid cash for telephone bill, $85, C321. By the way, the C stands for check and says the checks used as source documents are abbreviated as C. So generally, if a corporation buys something with cash, they're going to probably write a check for it. They don't actually hand over paper money like the cash that you're thinking of. So they're going to write a check, and we're going to abbreviate it C and then the number of the check. Okay, so telephone bill, $85, C321. All right, so of course I'm going to record the date. Where it says account title, you are probably going to put what it was that you purchased, or if you already know what account it's going to go into, you can use that. So this is the telephone bill, right? So you might have an account that is just for your telephone expense. Or you might lump that in with your other utilities, like electricity and gas. So let's imagine that this is lumped in with your other utilities. So we're going to put utilities expense. And if it helps you, you could put in parentheses telephone bill. All right, CK number, that stands for check number. And this was check number 321, so 321. Post reference will be recorded in whenever we actually move these transactions to the ledgers, and that's not until the next step. All right. Now, you'll notice that there are several columns in this journal. We have got 5 columns. I have labeled each one of them debit and credit, and to try to help you out, I also color-coded them. So debits are green, credits are kind of this reddish pink color. One thing that I think might help you is the general credit column. Even though you have that available to you, you are never going to record a number in that column. So I usually tell students on your cash payments journal, go ahead and select this entire column and black it out. So you're not even tempted to put a number in that spot, because if you do, it's wrong. And the reason it's wrong is because when you're thinking about the credit part of this transaction, if you are paying cash for something, cash is always going to be the credit. Always. And we have a column for that, for cash credit. We are never going to have a credit for this general or wherever the account is over here. So let's just go ahead and black it out. All right, so speaking of the general debit and accounts payable debit, the general debit is for any accounts that we already have an account for. So like the utilities expense or the telephone bill. If it is a specific business that we are paying back, then that's going to be accounts payable. So for instance, it's like if we were to have borrowed money previously at an earlier date, we bought something on account previously, and now we are spending cash to pay off our bill or our debt, then it would go in the accounts payable debit. So there is two possibles on debit: something that you're paying for right this moment, like utilities expense, or something that you are repaying, like accounts payable. And then as far as credit, cash is always the credit every single time. So you're going to have a number in this cash column every single transaction. Now there's one column that we haven't discussed yet: purchases discount credit. Every so often you're going to have a transaction where you're going to receive a discount on the item, and it is going to give you a percentage of the discount that you're receiving. We go ahead and we record that information in the purchases discount column. There is two different types of discounts. When we get to one of those, I will explain it a little bit further. But right now, what you need to know is that discounts go here. Okay, so let's get back to our original October 1st transaction of paying our telephone bill, $85. So we have recorded that this is a utilities expense. This is not, we're not paying back somebody for money that we had borrowed. We are paying our telephone bill. So it's going to be a general debit of $85. Okay. The accounts payable debit is going to stay blank because we're not paying anybody back for money that we borrowed on account. We are not receiving a discount on this transaction. It does not say anything about us getting a discount on our telephone bill. So this also stays blank. And then finally, cash credit is the amount of cash that we are actually spending. And in this case, it's the full $85. And that's the end of that transaction. Now, this is probably getting a little too far ahead, but when you were to carry these numbers into your ledgers, you would record a cash credit for $85. And then you would also record a telephone or utilities expense debit of $85. But that's for another date. So let's move on to the next transaction. October 7th, paid cash for office supplies, $52, check $322. All right, so October 7th, we purchased supplies. It was check $322. We are purchasing these supplies now. We are not paying off a debt, so it is going to be a general debit of $52. And we are not receiving a discount, so cash credit, $52. Moving on. October 11th, paid cash to GMT Hardware for merchandise with a list price of $800, less a 60% trade discount. Okay, so this is a little bit challenging because we have a discount. This one is called a trade discount. The next transaction is just a typical discount of 2%. This one is 60%. So let's talk about what these mean. So first of all, we record the date like we always do. We purchased merchandise. This is going to go into our new account called Purchases. Maybe you remember this account from when we did the Purchases journal. In that account, or in that journal, we were recording transactions of buying merchandise on account, and the Purchases account always got the debit. We are still making a purchase of merchandise, but this time we are using cash to buy that merchandise. So we are still going to record a debit in our Purchases account. Check number 323. Now, it says that this merchandise is worth $800, but we are getting a discount of 60%, a trade discount. So we have a tiny bit of an issue. We cannot record this as being worth $800 and only paying 60% less of that, then our debit and our credits would not add up. So we actually have to determine how much we are paying for this merchandise first before we can go any further. So I'm going to bring up a quick calculator. The merchandise was originally worth $800, and we are getting a 60% discount. So we're going to multiply 800 times 60%, or 0.6. And we get $480. Now this is the discount amount, not how much we're actually paying. So remember that 480. The merchandise was originally 800. We're going to subtract 480, and what we have left is $320. This is kind of like when you go to the store and they're having a sale or a discount on something. When you get up to the cash register to pay for your item, they apply the discount. So let's imagine you buy a brand new pair of pants and they are 50% off. When you get up to the cash register, the price tag might say $20, but then they apply that 50% off, so they only charge you $10. So this is how this is the same way. We bought this merchandise and the price tag said $800, but we're getting 60% off, so we're actually only going to pay $320. So that is going to be what actually goes into our journal. So $320, and a cash is $320 because that's how much we are paying. Okay, you're probably wondering, well, why didn't it go into this discount spot? We'll talk about that on the next one. October 17th, paid cash on account to West Supply, covering purchase invoice number 199 for $3,420, less 2% discount. Okay, so this is kind of a complicated transaction. So it's October 17th. West Supply is the company that we are paying back. So imagine that we at some point went into West Supply. Maybe it was a week ago, maybe it was 10 days ago, maybe it was a month ago, and we found $3,420 worth of stuff that we wanted to buy. So we bought it, and we said, we will pay you back later. We bought it on account. We're going to pay you back later. Well, West Supply sent us an invoice or a bill, and they said, hey, you remember that stuff that you bought from us for $3,420? We'd kind of like to be paid for it. But we'll tell you what, if you pay it now, we'll give you a 2% discount. So that's a pretty good deal. 2% doesn't sound like a lot, but whenever you apply it to over $3,000, that ends up being a pretty good amount of money. So we are going to record check 324. This time it's going to go into the account payable because we are paying back West Supply. And we are paying them back $3,420 worth of stuff that we bought from them. But they're giving us a 2% discount, which is awesome. So we're not actually going to give them $3,420. We're going to give them 2% less than that. So I'm going to take $3,420. I'm going to multiply by 2% or 0.02. And I get $68.40. So I'm going to apply that right here in the discount, $68.40. Now, if I originally owed them this amount, $3,420, I subtract $68.40, what's left is how much I actually paid. So I'm going to do a quick equation here. $3,351.60 is what I'm actually going to pay them. Okay, last one. Paid cash on account to Quill Forest Products, covering invoice number 182, $4,380, no cash discount. Oh, too bad. So, the 19th, Quill Forest Products, $325. We're paying them back for what we originally owed them. So $4,380. No discount this time. So our cash credit is also $4,380. And we are done. All right. Well, try out some on your own, and good luck.